All right, Morgan, thank you very much. Bye.
All right, everyone, I apologize for being the village idiot. Thank you for being patient and waiting. Yana, can you hear me okay?
Yes, you're coming in great and we can see your screen.
All right, so I'm good to go, I guess, whenever you're ready for me.
We are ready. Take it away.
Okay. Want to thank everyone for making the time to come in. My name's Ray Burchett. I'm with Infinity Futures. I have a marketing association with them. I'm also creator of Intuitive Development Training. Quick background. I traded in the big S&P pit from August of 1983 through the end of June 2004. And 1997, I co-founded Local Knowledge and pioneered online trader development with some other folks. And then that led to me associating high performance to intuitive function and creating intuitive development. And that's what brings me here today. And that's what I'm going to share with you and just use the story of how the retail trader needs to compete with the High Freq, algo, and the Fed to tell that story. So just a little bit of legalese here. Trading futures, options on futures and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. So that's me. That's my past. So what we want to do today is provide fresh perspective. Excuse me, I'm fighting a sinus here. Provide fresh perspective for what's really taking place in the market and how best to compete. And I want you to take away a tangible understanding for how to best support your development and performance going forward. So what we need to do is start out with some perspective. Trading has really transformed over the last 17 years since the E-mini came on the scene in September of 1997. And prior to then, all the decision making was basically driven by humans and direct interaction in the market. And obviously, we've shifted to machines between the High Freq and the algo guys. And barriers to entry because of the internet have certainly dropped tremendously. And so what that's brought in is a lot of inexperienced retail traders. Certainly there's some experienced and successful ones, but anyone that's been around the business understands the vast majority are aspiring traders. So we've ended up with a heck of a lot more volume because of all the machine-driven trading. And we also have the increase in the retail trader, the guy clicking the mouse. And so as a retail trader, which I'm expecting most of you folks to be, we really need to know what we're up against. And so that's what we want to have some understanding for. And I forgot to advance my slides here, but basically, again, we're up against the High Freq guys, the algo guys, and the Federal Reserve that's becoming more and more aggressive through quantitative easing. Bottom line, the High Freq guys, they control the scalp, trading for a tick. That's the machine. That's not a space that you're going to win in. The algo traders control fair value. Now, the retail trader can compete in fair value, but it takes a fair amount of time and a real good methodology to be successful there. And as we've all learned, the Fed controls the trend. When you have all the capital you need to do whatever you want, you're the king. And I like to tell people we really haven't had a capital-driven market for the last 4 years at least. It's all been politically driven. And certainly the Fed has been at the levers for that with quantitative easing. So how do we survive when we're up against these folks? Well, despite the firepower of the High Freq and the algo through their hardware, all they bring to the table, their financial engineers, their software network guys, and everything else, but they're not geniuses either. In other words, they're really smart and bright, but the good news for all of us is the market is still pretty unpredictable. And even despite the Fed's best effort, the market still goes out of balance. And so what we really need to do is understand where we can compete. And what we have to do is really wait for when the market comes out of balance. And we have to wait for it to show its hand. And so this is a snip from Tuesday. And, we can see that there's some things on this chart. I have proprietary price levels, and then everything else is available to you guys. These are exponential moving averages. The green is a 50. The magenta is a 26. The orange is a 12, and the blue is a 9. And that's just the Williams Awesome Oscillator down below. And the only thing that's proprietary on this chart are these value levels. And there's things that we just have to, look for over time, develop a process that let us know when the market is out of balance and wait for it. In this image, it shows how the exponentials tell that story, lining up with the value level. And then we see the oscillator going from positive to negative. And I'm just using this as an example of showing you that the market does go out of balance and that you guys already have tools available to you in any charting application that can help show you when they go out of balance. I'll tell you how you can get these value levels later, but again, this stuff that I'm showing you here is in every charting platform. And obviously, we don't get these plays every day. We might not get this play every week. This is yesterday, very quiet market. But we can see that we got the same thing again with the exponentials, the 9 and the 12 crossing the 26, the oscillator going negative to positive just above a value level. And we ended up with the range trade, but this at least told us where we were wrong. In other words, high quality setup, not a lot of risk. And we take it to today, and obviously, big move down, and this is how it played out today. Again, we've got the value level. We have the 9 and the 12 across 26 and the 50. We see the oscillator going negative. And again, the value levels are a big part of the story. But these are the things that we need to wait for. We have to wait for the market to get so out of balance and show its hand. Like I said, you may go 1, 2, 3 days without making a trade. But that's what you have to do to survive as a retail trader in this environment. You can't trade for a tick with the High Freq guys. You can develop a fair value strategy, but it's really tough. And the hard part about fair value is consistently executing it and getting really good at understanding how much stretches in the rubber band. In other words, that's something that is really unique to the trader, the craftsman, if you will. And there's no set there's nothing set in stone in creating that spread. It's just something that you develop over time based upon volatility and the personality of the market that you're trading. And so that's hard. An example of fair value in using these exponentials, if you go back here and you see they're on top of each other, the high is, say, at 71, and the bottom here is at 69. So you take the mean, which is at 70, and you figure out, okay, how much stretch is there in the rubber band? Well, I've got a value level up at 75, so maybe 5 ticks to the upside, and maybe 5 ticks to the downside. That's my fair value. So and in this instance, because the bias is to the downside, we've been going sideways. So technically, longer we go sideways yesterday, higher the probability will go lower. So you'd say to yourself, okay, I'll look to play a fair value at +5 against that value area, and it turns out to be a great short. But again, that's something that's developed over time, and that's just a quick example of fair value. Now, this also works when the market's going up. We just happen to be going down this week. This is back from February 27th. And we can see again that we have the exponentials going through the 9 and the 12 through the 26 and then the 50. We're moving above a value level as the Williams Awesome Oscillator goes from negative to positive. And so again, it's just all these things working together. And so, yep, you're not going to get this every day, and you might only get it once or twice a week. But this is what you have to wait for. And you look at those, let's say you get it 7 or 8 times over the course of a month. This is how you succeed as a retail trader, really waiting for these things when the market is out of balance, when the high freq guys can't screw it up trading for a tick, when the algo guys aren't going to be in there working fair value. And when, in this instance, we're going up, you'll probably have the Fed as your friend. That's why it's so skittish trading the market when it's going down, because we never know when we had Uncle Ben. Now we've got to figure out a name for, I guess maybe it's Auntie Janice or Auntie Janet, I should say, is going to come in and decide to play. And, I see some comments in here about Ichimoku, and Ichimoku is another tool that I use. It's real important to know always the relationship of the market to the cloud. And, that's the 5th piece here. And again, that's available on most charting platforms as well. And that lines up very well with these exponentials because Ichimoku uses the 9 and the 26. So the cloud ties into this as well, but I don't have the time to get that deep here. So bottom line, we want to wait for opportunity. So to me, the 2 biggest challenges a trader has is, number 1, having the patience to consistently wait for these out of balance opportunities. It's tough. Bottom line, the hardest part of being a trader is waiting for the market to align with our strategy. Patience takes energy. Where does energy come from? It comes from conviction. In other words, knowing that we're doing the right thing. We're certain, confident, and committed. Think about whatever you do in life, not just trading, but if you're an athlete competing, whatever you do in your business, if you're a coach, if you're a teacher, whatever it is, or let's say you've got a special skill set as a craftsman. Let's say woodworking is one of your hobbies, and you've got years of experience. You go into your wood shop, there's not a doubt in your ability to craft whatever you've decided to craft. You know how to use your tools, you know the process. In other words, you're certain of your purpose, confident in your ability, committed to the task at hand. That's great conviction. So you have no anxiety over what you're doing. It's actually a labor of love because you know you're going to make something that's you. And people can see you in it. And it's a beautiful thing. It's the same way when you compete as an athlete. Your teammates can see that that's you. Your fans can see that that's you. And it's the same thing in trading. We have to have that mindset. It's got to be our decisions, our choices. Things happen way too fast in trading. We can't process somebody else's decisions and then process our own, and then we've missed out on the opportunity. So we want to get to the point where we can use educators for a starting point, but they're just folks with training wheels. In other words, you never want to have a dependency on an educator. You want to use them for training wheels and then say thank you very much and go on to your own decision making. But we need a path to develop that conviction to get to that point when we're certain, confident, and committed. In trading, we want to be certain of state, confident in strategy, and committed to waiting for market alignment. That gives us the energy to patiently wait because we know what we want to do. We know why we want to do it. We know how we're going to do it. It's all figured out. We see the picture that we're looking for in our mind. We're not sitting down to make it up. We don't have to do any analysis. We know what we're looking for. We've got great conviction for our tools, why they're representative of the energy in the market. We've got great conviction for why they work together. So when everything comes together and that we get the validation to execute what we've been waiting for, all the pieces to the puzzle are there. It's just automatic. It happens unconsciously. Just like an athlete. You know, you'll never see a hockey player in a breakaway slam on the brakes, look at the bench and say, hey, coach, pass, shoot. And if I'm shooting, 5-hole, 2-hole, 3-hole, right? They just keep going. It's all automatic. They're functioning intuitively in a deep unconscious state. And that's what we have to do as traders. Bottom line, all professionals perform intuitively. It's just that the most effective consistently achieve and sustain deeper intuitive states. They have superior awareness. And they just keep seeing and doing before others because that superior awareness keeps taking them to a deeper place of understanding, greater conviction. And so it's that same conviction that when we do get that alignment, we just make the trade. So conviction does two things. It gives us the patience to wait, and it empowers us to consistently execute. Now, you guys are probably figured out already, simulated trading doesn't teach conviction. It teaches you how to use the platform. Click the mouse, take a trial and error approach, keep clicking until you find something that works. And that's where most of the people get trapped. In other words, when people come to trade, they're not they want to do the work. The real challenge is finding their way to the work that matters. And most, unfortunately, don't last long enough to get there. They either become too frustrated, burnt out, or run out of capital. But the real secret is to look way, way below what you're doing in sim trading to your decision-making process. Ask yourself, hey, where are my beliefs getting me? What are the behaviors that those beliefs are driving? How are they developing the awareness and ability so I can become certain, confident, and committed? And that's the real challenge that most traders never get to. They don't even think that they have to go there. So what we really need to do is identify what's most relevant to our development and performance as a trader. That's the work that matters most. Every profession has what's called absolutes. That knowledge is built upon, I should say assimilated from, and competency is built upon. Medicine, engineering, law, accounting, sports, music, they all have absolutes. And that's the starting point. And accepting and holding ourselves to those absolutes, that's where we see the gaps, which are just opportunities to improve. And guess what? The more gaps we see, the more gaps we fill, the more competitive we become. In other words, every time we see and fill a gap, we trust ourselves a little bit more, a little bit greater confidence, a little more awareness, a little more ability. And we get to that point where we're thinking independently. That's what we That's what happens when we trust ourselves. And that independent thought, that's what allows us to tap into our creativity and imagination, integrate our skill, knowledge, and experience. And that's how we realize and expand our potential. But it all starts from accepting and holding ourselves accountable to the absolutes. And unfortunately, most traders, aspiring traders, really don't understand what those absolutes are. They end up chasing their tail like a gerbil spinning around on a wheel because they don't know what to anchor their development to, what they need to do to put themselves on an intelligent path. So the ultimate trading edge is being on that path, knowing the absolutes, being able to consistently achieve and sustain that deeper state of awareness to see and do before others. I don't know how many of you have ever been on the trading floor, and it's, they're a dinosaur now. That I will be shocked if the pits are still there a year from now. Someone told me about 2 weeks ago that Goldman pulled their broker out of the S&P pit. But back in the day, when things were absolutely crazy, when the market turned, you could physically see what a split-second difference would make in either getting a trade or getting out of a trade. I'm sure you have an idea of it clicking a mouse, and you don't appreciate it when the High Freq and Alco guys with their arms raised to do everything they can to squeeze out latency, where they're measuring everything in milliseconds and then nanoseconds. So what we want to do is keep putting our decision making further and further ahead of the rate of change. And you're probably thinking, well, how am I going to compete with the machines? Well, it's a cumulative effect of getting that decision making ahead and ahead and ahead. In other words, as you prep, you become more and more aware. You're filtering, processing, applying information much more effectively. In other words, you just keep becoming more and more aware so you see and do before others. I don't know if you guys have ever heard athletes when they're interviewed after a great game, peak performance, if you will. Comment that they'll all often make is that it seemed like things were in slow motion. Hitters will say they could just see the ball great. Well, the reason why things appeared in slow motion, why they could see the ball great, their decision making was just so far ahead of everything else that slowed things down. And that's what intuitive function does. It keeps pushing our decision making further and further ahead, or I should say intuitive development. So it actually seems like things are slowing down. If you're an athlete or a musician, go back to your peak performances when you've just been so consumed by it. And that's where we want to get to in trading. And that's what intuitive development does, because it makes it tangible. It identifies the elements causing intuitive function to occur, and then it aligns the beliefs and behaviors best supporting development of those elements, all geared towards trading. The natural learning process, the more time we spend on something, we get greater knowledge, we develop skill, we gain greater experience. And so what that ends up doing, it reduces the amount of information we get through, and it accelerates our decision making. That's a natural progression of development. But that doesn't work anymore. In other words, that is a linear path that has really caused us to fall further and further behind. And there's a whole bunch of statistical data out there, but this all started happening in the late 90s when we had the convergence of the internet, hardware, and software. And folks that didn't transition to an exponential development path have been left behind. And so what intuitive development does is it takes us to that exponential development path. And that's where we have to be to develop the awareness we need to keep those decision making ahead of the rate of change, to be able to have the ability to make the most out of the digital power being created by technology. So, this is the path to getting ourselves ahead. You've got to understand the absolutes for trading. And to understand them, you have to understand the relationships between the beliefs and the behaviors they drive, and then how they go into developing the functional components, the professional beliefs and behaviors. All that has to come together. And the absolutes provide that. That's how we see the gaps and how we can start to fill them, especially the gaps and bad habits created by sim trading. And again, it's effective because it gets us from that linear to an exponential development path. And I'm going to talk about that exponential path in a minute. And because we're so locked in on what matters most, is distraction and conflict go away. And we're just consumed by information and knowledge, but that information and knowledge is coming in based on our filter, so we're not overwhelmed by it. So old way, linear, new way, exponential. Good test to see if you're on a linear or an exponential development path. If you're setting timelines for your development, if you're setting daily or weekly profit goals, you are on a linear path. All that stuff is linear. It's a double-edged sword. I'll give you an example. Let's say you're setting profit goals. Well, what happens when you hit your daily profit goal? Markets align with your strategy, you're tied in, right? Everything that you work for is right there. You're ringing the register, you're stacking the cheese. And now you want to stop? Everything you've waited for, everything you've visioned, worked for, it's all right there aligned. You make your daily profit target. You stop? In what sane world does that make sense? When everything you've worked for is right there. Now, let's say you lost $500 yesterday. And your daily goal is $500. So now you come in today. You got to make the 500 I lost yesterday, the 500 I didn't make, and then I've got to make my 500 goal today. I've got to make $1,500 today to get back on my path. $1,500. Never mind that the most you've ever made is 800, but today you've got to make $1,500. Well, remember, we only want to trade when we're certain of state, confident of strategy, committed to waiting for market alignment. How do you think our trading's going to turn out if we're just focused on making $1,500? I guarantee you we're going to get our butts handed to us. So what this linear path goal setting does, what it's really doing is forcing us out of the market when we're likely aligned with it and forcing us to participate when we're not. And I know that's a hard pill to swallow. I mean, after all, our parents started setting goals for us when we were 2 years old, waddling around in diapers. I don't say that to be funny, but just to help you guys understand how deeply embedded goal setting is. But it's the fastest way for self-sabotage in trading. Go ahead, set profit goals. Double-edged sword. Let's talk about timelines. Why we can't timeline our development. We can't control the opportunities the market's going to give us to learn. We can't control the opportunities the market's going to give us to learn. So that's why we can't be on that linear path. It's death for a trader. We want to be on an exponential path, locked in on the work that matters most. That's what the absolutes do. We just want to make right decisions by accepting and holding ourselves accountable to the absolutes. And yep, we'll still have losing trades, and yep, we'll still have losing days. But the collective effect of those right decisions is going to minimize the frequency and severity of loss, maximize our profits, and optimize our performance. And that's what happens when we learn how to go on to that exponential, when we understand the absolutes, when we understand the power of intuitive function and how it's developed. So how can I help you? And I'm going to get to questions here. That's really what I enjoy doing. So how can I help you wait for those opportunities when the market's really out of balance? So you have the advantage over the High Freq and the Alco and the trend. You can go to infinityfutures.com. There should be a B in there. I apologize. I just noticed the typo. It's webinars, Let's Talk Futures, 317b.aspx. Every morning from 7 to 8 o'clock, I do live market analysis and trade setups. And you'll see a lot of the things that I was showing you in those slides. And I think some of you may have been in there with me this morning, so you know what I said about the market today. It's free. I do it every morning, 7 to 8. Again, infinityfutures.com, webinars, Let's Talk Futures, 317B ASPX. So again, freebie number 1. Freebie number 2, go to myemini.com. Become a member. It's free. You go there, and once you get into the members section, there is live archived webinars, and then I have my own webinars in my section. Under that live, or I should say the archived webinar section, there's a webinar, Learning Gaps and Bad Habits created by Simulated Trading. And you should absolutely go and see that. The second link is myemini.com, www.myemini.com. And so you should go there just to see that free video. Again, that's free. And in the evenings, I do a free video recapping the market, the E-mini, every night. Again, all that's free. If you really want to get to the good stuff, come to my website, intuitiveperformance.com. And I'll come back to this page in a minute. So I want to give you some special coupon codes. If you want to take IDT trading, intuitive development training, it's 12 hours, 4 sessions, 3 hours each. All the details are on the website. It's a year-long development program and support. And the next training, live training, is online. It begins at 7 to 10 Monday through Thursday next week. Third week of every month, it's in the evening. First week of every month, it's in the afternoon, noon to 3. You have access to these live sessions for a full year. There's also on-demand recordings, so you can register today and listen to the on-demand recordings of the live sessions. And I also do a monthly Saturday review, so you can keep coming in and get your questions answered. So there's a $150 discount for intuitive development training. That's the code, and that expires the end of the month. And then the other thing that we do that is unlike, well, there's nothing like intuitive development out there, but I combined it with neuroplastic training with John Kennedy. And you can go to combatbraintraining.com to learn about John. In 2006, he pioneered neuroplastic training for the Marine Corps and was so successful, they immediately grabbed his stuff, and it went from IED, improvised explosive device, neutralization teams, to the SEALs, Delta Force, their taxi drivers, the Black Hawk helicopter pilots. You see, the military realized that it can identify the best of the best, give them the greatest training, support them with incredible technology, but there's still an information choke point. And that's what John, with neuroplastic training, gets them past. And John and I met because of the sequester. He had to start going outside of the military again, and one of the guys that was in the S&P pit with me for all those years knew what I was doing, and his company came in and had John come in and train them. And so Mark made the introduction, and John took my training, and he told me, he goes, you don't know what you have. You see, when I work with most folks outside of the military, because you got to remember, the chaff had already been separated from the wheat. He was working with the best of the best. But about 95, 97, 98% of the folks that he works with in corporate America aren't aligned. I'm putting that nicely. And so he's basically speeding up crap. And so he recognizes that what intuitive development does, it creates a elite decision-making system. So together, think of it this way. I build the engine that optimizes decision-making, and then John sits like a turbocharger on top of it, optimizing execution. And we're going to do our third live training. We did our first one in November here in Chicago. We did one at the end of January out in Denver. And we're doing it again here in Chicago, starting a week from Tuesday. And so this is a 10% coupon for that. You can go to intuitiveperformance.com. John Kennedy is the gentleman I do this with, and all the information is at intuitiveperformance.com, but you can go ahead and copy down this discount code for 10% off that training. So I'm going to take a drink of water and look for questions to come up here, and I'll be happy to answer them. And I'm just going to do a little reconfiguring here on my desktop so I can see the questions. Paul, my name is Ray Burchett, B-U-R-C-H-E-T-T. James asked, the value levels relate to EMA crosses and market balances. The value levels are computed independently of all of that, but why the value levels are so significant is because of the way they match up. They're created independently, but the way they match up with those significant events, and they really give us guidance for entry and exit. I'm going to type in, let me go back here a minute, please. I'll type in the right URL for Let's Talk Futures. That should be it. Somebody wants to click on that link, let me know that it's good. That would be great. Yana, thank you. All right, my fat fingers worked. So folks, questions. I love answering questions. Paul, thank you. There's a whole bunch of you online here. Don't be shy. Well, I'm waiting for the questions to come in. I hope a lot of you still have your day job. Trading's really tough. Most people don't make it, and you dramatically increase your chances for making it when you have that steady revenue, keeping the anxiety down. My oldest son is 24. He's a mechanical engineer, and he started trading a couple months ago. He gets up early. He knows he has to keep his day job. So this is the same advice I'm giving my oldest. And I've got 6 more after him. So please take this to heart. Joel asked, do you always use 9, 12, 26, and 50? Yes, they're exponentials. That's what I use on the 30-minute. You should also know I don't look at anything less than a 30-minute chart. That's just my personal preference. Greg asks, I have to leave just as you were discussing goal setting. I am back now. Goal setting's a double-edged sword as far as setting daily profit goals. And I'll repeat that. And it's a great example of being stuck on that linear development path. You know, when the markets align with our strategy and we're trading well and we're hitting our daily profit goals, right? Everything that we've worked for is there. So it's crazy to step away from that just because we hit a profit target. To me, that's insane. Everything that you've worked for is right there. Now you're going to step away because you made X. And then the second part of it is, remember, professional trader only trades when they're certain of market state, confident of strategy, committed to waiting for market alignment. In other words, they know what they want to do, why they want to do it, how they're going to do it. All their energy is available to focus on when to enter and exit. But if we come into a trading day and all we're thinking about is how much money we have to make and not meeting that standard of being certain, confident, committed, we're screwed. We're giving up our edge. We're giving up our power. So what ends up happening is setting those profit goals is they force us out of the market when we're aligned and force us to compete when we're not. Dennis asks, what are the 4 EMA lines in the oscillator you use? The 4 EMA lines are the 9, the 12, the 26, and the 50. And Cornell asks, what time frames do you use? I use the 30-minute and the daily. I don't use moving averages. They're exponential moving averages. James, opportunities to catch the market out of balance. That's what the exponentials and the Williams Awesome Oscillator and also the cloud and my value levels, they all work together to highlight when it's out of balance. Ray, there's a difference between profit goals and money management. Yep, Dennis, great question. In other words, let's say you have a daily loss limit of $250, okay? You're up $750. Well, I've got a daily loss limit of $250, so now I could lose $1,000. No! Money management tells us, look, I've got a $250 loss limit from whatever my high point is at that given time. In other words, if I'm up, let's say, in my mind, once I get up over $300, right now I start executing that loss limit from $300 or whatever the next high is. So if I'm up 500 and my daily loss limit is 250, and I go from 500 to 250, well, then I'm done. That's money management. Jorge asks, why do you think exponential moving averages are better than regular moving averages? Because exponential moving averages weight closer time frames. They're a little bit more sensitive. Joel, do I use Bollinger? No. I just think they are not sensitive enough for my purposes, and the other things that I use do what I need them to do, give me a much clearer picture. Benjamin asks, if time frames do you use to enter and exit for, what time frame do you use to enter and exit for day trading? I just use a 30-minute chart. So any other questions? I'll talk about sim trading a little bit more to give you guys an idea of what you're up against. And this isn't intentional, by the way, about sim trading. But at the end of the day, it's just teaching us how to play a video game. I want you guys to imagine for a moment that you are the best virtual combat soldier there's ever been. You compete online. People are always reaching out to you to be on their team. You're the best at seeing the bad guy and getting rid of him. Child's play for you. You're the absolute best of the best. What do you think would happen if all of a sudden that virtual environment became a real one, a three-dimensional combat scenario? What do you think your odds for survival would be? You're the best virtual combat soldier that's ever been. Now all of a sudden you're dropped in. Now it's real. Would anybody want to take those odds for your survival? Come on, guys. We got 370 some people in here. Paul says, yeah, now what's behind you is no longer just a bookcase. Great comment. In real life, those soldiers have had incredible training. In other words, they have great conviction that they're organized in the best way they can to protect their flanks, their six. In other words, they don't have doubt. They know they've put themselves in the best position to execute that mission. They're totally focused on doing what they need to do to be successful. Well, what happens with sim trading, it doesn't develop any of that. And that's why so many people, when they go to trade live, they usually have a little success right in the beginning because they're smart enough to wait until the markets align with what they're most comfortable trading. So they have a little success, and then things change and they don't recognize it. It's like a tree. When you cut it down in the woods, it starts falling real slowly, and then all of a sudden gravity kicks in. That's what happens to most traders. They start falling slowly, and all of a sudden gravity kicks in, and it's splat. Because they haven't developed the beliefs and behaviors that need to be in place to support the emotional overhead created by capital risk and market volatility. A couple other bad habits that sim trading causes you to create. Trading more than a one lot. If you're trading more than a one lot in sim, you're killing yourself too. Remember, sim trading is all about validating good decision making. And when you go to trade live, you're not going to trade more than a one lot, right? You don't want to make your tuition any more expensive than it needs to be. The whole idea is to have sim as real as it can be for live. So don't trade more than a one lot. Remember, it's all about validating your ability to make good decisions. The second thing sim trading encourages us to do, to trade just for the sake of trading. Another way to kill yourself. Remember, we only want to trade when we're certain of state, confident of strategy, committed to waiting for market alignment. That's our edge. That's our power. We don't want to give it up. So those are bad habits. And plus, the biggest bad habit, sim trading encourages trial and error. Just keep clicking the mouse, hoping you'll figure something out. All bad stuff. So there's more questions here I want to get back to. Benjamin asks, I've been using 1 hour time frame to enter and 4 hour time frames to know the trend for the day. Is that a dangerous system? If it works for you and it's not broken, don't fix it. That's the beauty of trading. Each of us has to find out what works for us, and your own experiences should tell you if it's good or not, what the risks associated with are. Jay Preston asked, do you think you'll ever bring neuroplastic training workshop to the West Coast? We're thinking about going out to Silicon Valley, but we still got a lot of ground to cover before we do that. All right, so getting back to the combat thing, most traders would be dead, all would be dead. Maybe. Joel asks, how long have you been trading? Joel, I started trading in the big S&P pit in August of 1983. I was in there through June of 2004. I served on the pit oversight, the technology, and the index and options market nominating committees. I was in there for Black Monday, October 19th, 1987. That was just, that's the most volatile down day in market history. We're down 22%. Black Friday, October 19th, 1929, was only down 12%. So we were down almost twice as much. I could tell you stories that would make your toenails curl. Joe asked, do I have a chart to show I came late? Joe, you can sign up, go to this infinityfutures.com link that's up on the screen. I do a free live market analysis every morning from 7 to 8. You can come to that and see the charts. Nell asks, how do you train your brain to go to the right side of to go on the right side of the chart? Well, that's all gets back to the absolutes, and that's what intuitive development training is all about. Rob said, I took your IDT course. Rob, how long ago did you take it? And Cornell asks, how do you fit the news announcements in your system? I don't. I'm not in the market when the news comes out. My comments this morning, the folks in the room heard it. We had 3 or 4 reports, 3 reports at 8:30 and another one at 7:30 Central, another one at 9 Central. And I said the expectation is that we were all trending positive on economic news. So I basically said, look, wait until this stuff is out and then look to play the short side, simply because that was the structure of the market, a lot of energy for the downside. And so I understand these algos and High Freq guys are all working with digitized news feeds. In other words, those numbers come out in zeros and ones to them. We're reading, they're trading. So you don't want to be in the market around those economic releases. Dennis asks, what do you mean by absolutes or beliefs and behaviors? Again, every profession has absolute performance truths. Absolute performance truths. And so you need to know what those are as a trader to be able to direct and support your development. And unfortunately, most traders don't have a clue. How do I know? Well, I almost quit after my first 18 months of trading because I didn't have a clue as to what the absolutes were. I'd gone through a pretty tough school academically for accounting, University of Illinois down in Champaign-Urbana. It was the top accounting school in the country at that time, probably still is. Less than 30% of my class graduated. Went to work for Arthur Andersen in their most coveted division, small business, audit, and tax. Been pretty competitive as an athlete. And So I thought I was well prepared for trading. And again, after 18 months, I was ready to walk away because I had no clue what the absolutes were. Sophie wants to know what the absolutes are. Can you explain, please? They are the tenets that we have to accept and hold ourselves accountable to develop and support ourselves as a trader. And that's what the intuitive development training is all about. You can go to intuitiveperformance.com and find out about that. And that's what that $150 discount coupon code is for. Dennis asks, so absolutes are unique to each individual? No. The absolutes are common to the tasks and activities all traders share. So we are able to take those absolutes and personalize them to our own trader profile. Rob, thank you for the endorsement there. Rob Rich asks, what do you think of TV shows like Fast Money or Mad Money? To be honest with you, what did P.T. Barnum say? There's a sucker born every minute. You know, less than, I'm not certain on the exact percentage, but it's something like less than 2% of futures traders end up being able to make a living at it. And the reason why that percentage is so slow or so low is they don't treat it like a profession. You know, think amount of time, you know, engineers at least 4 years. Even accountants are in school 5 years. You know, lawyers are 7 years. You know what it is for a doctor. This is a profession, and you have to treat it as such. You have to put together a development plan. You have to have quality education supporting you. That's why I say don't quit your day job. I won't let my oldest son quit his day job because so few fail. So, you know, again, we look at trading, buy low, sell high, right? How hard can it be? It's going to go up, go down, and I've got all this great technology to help me. I should be stacking cash in no time. And so people get seduced by that. They get consumed by the arcade environment and the power of technology, and they just end up clicking the mouse, chasing their tail. All right, guys, I tell you what, I've got about another 10 minutes here. I'm going to just turn my mic off for a minute so I can clear my throat. All right, I'm back. Can everybody hear me okay? All right, thank you guys. So what other questions do you guys have? I love answering questions. And for some of you who came in late, the other way we really sabotage ourselves is setting timelines for our development. And we can't set timelines because we can't control the opportunities the market's going to give us to learn. So that's another sure way to cut your throat as far as your development. Tony asks, are you still active trading futures, FX, etc.? No. Tony, I am so busy developing this intuitive development trading. Well, it's developed. What I'm trying to do is break into corporate America. if you want to understand the need for it, you know, read about employee engagement and also read about digital dementia. GS asks, how long were you in the pit before you were successful? Like I said, I almost walked away after my first 18 months. And I stepped back. I mean, I was doing accounting work at night and on the weekends to pay my bills. I was at the exchange before 7. I didn't leave until after 4. And like I said, I was going home to do accounting and tax work, and I was burnt out. Because I had my CPA, I knew I could get a teaching certificate, so I was going to go teach kids accounting in high school and coach football. And my dad talked me into giving myself another 6 months, and I did it under real strict conditions, and that started me down to the path of finding the absolutes, and what eventually led to creating this intuitive development training. So I've gone through it. I know how hard it is. I know what turned me around, and that's what I share with folks. The Denver event, what was that like? It was 3 days. It's going to be the same format here in Chicago, Tuesday, Wednesday, Thursday. And when people sign up for the live IDT, I get them access to the live online tradings and the recordings ahead of time. So ideally, they've gone through the training once before they get to Chicago for the live. And then I integrate my training with John Kennedy's neuroplastic training, and it's really powerful stuff. Sophie asked, can anybody learn to be a profitable trader with the right education and hard work, or are there some biological limitations? Well, you can't be risk adverse. Usually a good qualifier for having folks to have a chance to be successful is if you have a competitive background in sports or in music, or if you've been an entrepreneur and really understand the sacrifice that it takes to get a business started or being part of a startup. Those are all great experiences to have to draw from, to kind of give you an idea of what it takes to develop and survive as a trader. Paul, you're welcome. Thank you for the comments. Tom is surprised at the 2% number. What percentage do you think of amateur athletes end up becoming professional athletes? It's like less than 1/10 of 1%. Do the numbers sometime on the kids that are playing Division I basketball in the NCAA, and how many end up getting drafted in the NBA. I think there's something, you know, like 1.6 million kids, maybe more, playing high school football. I think there's 1,700 players if you take all the NFL rosters and add them up. Yes, Rich, success rate. And again, intuitive development, it doesn't require a college degree. It doesn't even require a high school degree. Think of all the folks you know that have been incredibly successful that didn't bother finishing high school. To be successful, all that's required is the desire to develop a more complete understanding for your obligations and a deeper commitment to fulfilling them. If you're willing to do that, you can travel the intuitive development path. In other words, if you're willing to do the work, you're okay. You know, divide traders that come into this business into three categories: jumpers, dreamers, and pretenders. And jumpers are type A's. Like I said, they have had a competitive background and been pushed as an athlete, as a musician, as an entrepreneur, as part of a startup. So they know what they're getting themselves into. They're more than willing to do the work. The biggest challenge for them is finding their way to the work that matters, and that's what intuitive development does. It gets them there. Dreamers, they just think they're going to follow somebody. They just think they're going to follow somebody, find a system, find a trading room. That never ends well. Pretenders, they're just using trading as something to talk about at the cocktail party. They never had any intention of doing the work. So if you're a jumper, I can help you. Dreamers and pretenders, I can't help. Okay, Yana, thank you very much for having me, and sorry about the difficulties getting in, and thank you for everybody sharing your time, trusting me with your time.
Well, hopefully we just got to get the correct monitor showing here. Let's see what happens here. I got too many monitors up, probably. Yeah, that's not the one I want. So with that, we'll just kind of move on to the what we're going to talk about here. The first thing is we believe that you can use to the center, the horizontal. I don't have a horizontal slider here, but anyway, Paul, sorry about that. We believe the market is calculated, and the real question is, do you know the calculations? The most important item on the charts is the price, the most important indicator, and the price will move in three directions: up, down, or sideways. Now, with what we do, every pattern starts as a correction, and we'll talk about how to label that and calculate that. Corrections can become impulses, and that there are minor waves inside of larger waves. Now, what we try and do is trade from decision point to decision point with the rules that are based on our wave-to-wave analysis. And most importantly, regardless of what time frame you're trading, whether you're trading on a 5-minute, 144 tick, or whatever, knowing the higher time frame pattern is the most critical. And it's the higher time frame pattern that allows us to participate or to anticipate the next decision point. So universal mistakes that traders make: they buy the top or sell the bottom. I was really good at that when I first started. You know, the common comment for this trader is, if I would have just done the opposite, I would have made money. Can you still hear me okay? I'll move this mic over a little bit since I had to change monitors. Is that better? Okay. All right. So why do traders make the mistakes? The biggest problem is they do not know the higher time frame. Let's scroll down here, and we're actually just going to go to a blank screen and start pulling over some charts here. And I want to start with an entry chart. And when I moved them all, they all kind of disappeared, so we got to relocate them here. I'll find my NQ. There we go. So I'm going to start with the end in mind. And I don't want to spend a lot of time on this because this is primarily an education session, but this is our X90 Wave Rider indicator that we use for our entry chart. So this is the smallest time frame that we use. And this is set up on a specialized Renko bar that we had programmed for us, mainly to take out the noise in the patterns so that we can see them better. So I'll go real quickly how we use this chart, and then I'll go out to the higher time frames to show you why we think that way. So we came into the morning this morning thinking the general direction has been up, but we're at a point where perhaps we could get what we call a B2C corrective wave, and that's the only counter trend wave we really want to trade, is that B2C corrective wave. So on this particular template, our basic rules are, if the background is red, we go short. Background is green, we're only thinking long. And you can see we get several signals here in the morning. And the key to what we do is figuring out which signals have lower odds that we may want to skip. So basically what we look for is, first we see this red candle, background turns red. So depending on the higher time frame, we're now thinking short on this template if the higher time frame gives us that confirmation. Now what we want to see after it rotates, we actually want to see it pull back. We want to see it pull back at least to a green candle here, which we get here. So you can see this particular arrow, our beginning traders would not take that entry. Now they may take this one, and in this particular case, this trade would have been stopped at. It would not have hit our normal 3-point target. Same is true for this trade, though it may not have been stopped out because our target or our stop is usually 6 points on the NQ. So if the trader set that up in that order, then they would have had a nice profitable trade. We generally try to trade 2 contracts on most entries. We'll have a profit target the first day, usually, or first target, usually around 3 points. And then we will let the second one trail 5 points based on structure. Now what we get here is multiple chances to enter. And you can see that. We would have first target off. Now we probably got stopped on the second half at 5 point, on a pullback, 0775, 1475. So we would have been stopped out, but then we have a chance to re-enter. And that continues here. Now this is actually the same entry. We would not hit first target. We wouldn't enter here because the pullback wasn't far enough for what we were doing. So we had several nice entries. So the question becomes, on a day like this where everything's working out really well, is where does it stop? You know, when do we stop going short? Does anybody ever have that question? You got a trade going really well and you want to know when to get out? That's where the higher time frame will come in, and we'll get to that. So now what we want to look at is our higher time frame chart, and I'll pull that over. So you can see we got several entries here. We went to lunch, it rotated green. Now you could actually think long, which not too many people are probably going to want to do on a day like today. But you can see here, this entry we would not take, no green candle. Here we got green, then yellow, so we could take that entry. You could take this entry, but that gets stopped out, and then there's some more short entries going into the day. And then at the end of the day, it kind of gets a little bit choppy. So here's what we did to set up our day using the higher time frame. And the thing we want to look at is wave patterns. Now, we all know the market doesn't just go straight up. But if it's going to go from here to here, it's going to do it. And it's going to pull back, and it's going to go, and it's going to pull back, and then it's going to go. Right? In fact, what it usually does is it'll come up, it'll come down, and it may do something like this, go a little farther, come down, chop around. That look familiar? Go on up, and then come down and correct all of this. So that's a pretty standard pattern that we look for. So what we want to do is we want to calculate the waves every day, where I'm on a 60-minute chart here. We try and get daily levels every morning in our room. So if I look at this chart, the first thing I'm going to note is from this low to high, what we anticipate is a correction into the 50% 618786. We don't use the 382 a lot, so in this case it looks like it might have come right down to it. But it's more important is how does it get down into this support level? And generally what we look for is what we call an ABC correction. And we have rules on what makes that an ABC. So high to A, we're generally going to avoid. We're not going to trade high to A. We're not going to trade low to A. It's the hardest wave to trade. So this is a place, because we don't know where A is going to stop. In fact, we don't know where A is until we have B. And to get B, we need this bounce from A up into the zone. That makes sense? So once we know we have B in this zone, then we can label this A. So just type a Y in there if that makes sense, and any questions that come up, throw them at me as we're going through this, because it's the best way to get these answered. Okay. So we have A, now we have B. So when price is right here, what we want to know is where is C going to be if we get an ABC correction, because we don't always. Here the pattern was A to new high. So that can happen, okay? So where's B? B is going to be our C. Our first target for C is we reverse extend. We take our fib extension tool and we go from the B high here back to this A low and we bring it back. So it's 3 clicks. Thanks, Joan. So here we are. So as we were watching this, and this was yesterday, as we come into this zone, we can say, okay, we've been short, where do we stop? Well, our first C target is most of us will get out here at this C target. Very much like a measured move, we're going to calculate it. So you see here now, we come down to C, we bounce back up. Now what C becomes, the market repeats itself. So C just becomes bigger A. Does that make sense? Okay. All right, so here we are, bigger A. So what do we anticipate? We anticipate a correction of the entire ABC. So how do we do that? How do we calculate where that's going to be? It's really simple. We go from the high down to C, we retrace, there we are right at the 786. ABC makes A, exactly. So as we came up to this price, we're saying this is where we have to be careful longs. Now C, in an uptrend, C is a buy. So from here, we could be playing this long on that template, all right? When we get to B, the way we would define that is now we are late to be long, but we're early to be short. The direction's up, but this wave is probably getting tired. So we want to be careful to the long side, but it's too early to go short until we have some confirmations. So at that point, we break down the chart. Now, if we're going to get a bigger B to C move, we want to be able to calculate where that's going to be, and we just do the same thing. We repeat the process. So today, when we're trading the NQ and we're catching the shorts, where are we going to stop going short? Right here at what ends up being bigger C. Does that make sense? Can I zoom in a little? I can zoom in a lot. How's this? Is that better? Thanks, J-Dub. You can see that a little bit better. So you can see we came right down here to our C target. So at this point, we are no longer saying, you know, I'm going all in short. We're anticipating this bounce from our C target. C is the buy in an uptrend. Okay. So going into tomorrow, this is exactly how we would use this chart. Now going into tomorrow, assuming everything stays the same, We're going to say, you know what, we're at a C buy, we get confirmation, we can go long with a target up into this zone. Everybody with me? Now this can be used on any instrument, any time frame. So we do this every day. So now I'm thinking, okay, on this 60-minute, clearly, we've been going up. We've hit this high, new high. We've ABC'd. I notice we also have this previous low. We would do this in the room. We go, look, not only are we at C, but we just double bottomed, late to be short. That makes sense? Now, we use very few indicators, nothing on the lower half of the chart here. But we do use the cloud, the Ichimoku, and I'll put that in here. Ours is a little bit different to give us additional support and resistance levels. So I would come into tomorrow, and the first thing I would do, and let's just go ahead and get us some NQ levels for tomorrow. So the first thing I would post is, you know, we're going to have some resistance. You're probably around 36.80 if you get a long signal to go long. Now, we're probably also going to have a little bit of minor resistance on a retest of this trend line. Okay, so we're going to have we're going to put lines on our chart, and then we're going to trade in these open spaces. So this is how we're going to know when we can add, when we want to take targets, when we want to tighten stops. Now, what we'd anticipate from here is a bounce. Nothing usually goes in one wave, right? And the thing we would have to do is now we're back in resistance from here. If the market's going to sell off, we could continue and get another C. So we're going to have to watch out behavior when we get over there. Going into tomorrow, I'm looking for a bounce up into resistance. The market's been long for 5 years now, so I have to honor that until it changes. Does that make sense? Everybody with me thus far? Anyone totally confused? So let me go ahead here. First of all, let's remove all these drawings. We know we're at a C target here. And let me go ahead and load the template we generally use on what we would call this our condition chart. So we use the Ichimoku cloud to help us with our support and resistance. So the first thing I'm going to note, again, I'm going to go back to this low, and I'm going to put some lines in exactly how we would do it for the room. Long drawing tool. So we know we have C here. We could get a bounce, but I also know that right here I've got, and I'll show you what these other lines are that are charted. I've got the 50%, 618, 786 of that wave. Now I also know that I'm sitting right on key support. It's been support. It's been resistance. That's a significant level. All right, and we'll see how we're doing that. Now, these lines on this chart, I'm looking at a 60-minute chart. We have our Tenkan-sen. How many people here actually use Ichimoku or have been looking at it before I get too far into it? You love it? Okay, great, fantastic. Now, we do something a little bit different with the Ichimoku. Now, you see this HTF stands for higher time frame. So my Tenkan-sen is the magenta. I'm sorry, that's my Kijun-sen. The cyan is the Tenkan-sen on this. So I'm looking at a 60-minute chart. Now, what this indicator does, it will plot higher time frame Ichimoku lines. So this cyan line here that's a little wider, that's actually a daily Tenkan-sen line. Okay. This magenta line down here is a daily Kijun-sen line. So now if I go down to a 50-minute chart, because once we start, the trading day starts, we go down into this time frame, you can see here's my 60-minute, And it turns out both the Tankinson and the Kijinson on the 60-minute are overlapped right now. But I have my 60-minute lines and my daily lines on here along with my 15-minute lines. So that gives me additional levels of support and resistance because I want to trade open space. So I can come in here, I've got my 50%, I got my 618, I got my 786. And so now I know coming into the day where my open space is. So when we're going short, I know I can go short, or now when I'm going long here, I know I got space, I got a lot of room up to my next resistance level on my entry chart here. Does that make sense? So if I choose to go long, I know I've got room up to my resistance level. And at this point, I'm going to tighten stops. If we break through, if things are set up correctly, I might get an opportunity to add in or build the position. And I know by the time I get up to my 786, I'm now late to be long and early to be short on this chart. So that's how we use the Ichimoku. Now we also use a little different settings because the higher time frame is important. I don't use standard settings on the Ichimoku. Instead of the normal 9, 26, 52, I just double it, 18, 52, 104. We find it holds us better, longer in the waves, and we're trading for longer waves. What time frame? It depends on what your goal is. Are you investing? Are you in a buy and hold? Are you day trading? For day trading, and I'm going to go out to a monthly chart here, guys. This is a 15-minute chart for day trading, and we will use this for day trading, primarily futures, forex. I don't do a lot of stocks. I do trade options, and I will go to higher time frames on options. So we'll go out to that. The important thing to note, to remember, is all of this works on any time frame. So whether we're using a 15-minute, trying to figure out where C is, right? C is, it all works regardless of time frame. And probably the best way to demonstrate that, let me do one other thing. Let's go out to crude, and then I will look at any chart, any symbol you guys want to look at. So here's what I want to show you on crude. Now we talked about waves go up, they correct, they go up, they correct, and then they go up. Now we work in threes. Impulses usually happen in threes. If you get 4 impulses, you will get 5. But we just worry about 1, 2, 3. If you can count to 3 and you can say ABC, you can learn what we do. It's that simple. So here I'm showing you what we've got here is from this low to high is we have an impulsive move. And the way we know that is I will look at Baidu. Let me get through this, Joe, and towards the end we'll just go through any stocks you want to go through. All right? How's that? So we label our impulses 1, 2, 3. Now we label them. Originally this was an A. It became a 1 when it kept going up, and we got 2. So 2 will be the 161 extension of the first wave. So you can see what happens here is if I extend this, I'll just overlap it. Here's where 2 was. 3, and we got this one to the penny in the room. 3 is the 127 of 2. And it came right, I mean literally right to the penny that day. So at that point, 3 is complete. And just like ABC, here's 1, here's 2, here's 3. Okay? That makes bigger 1. Works just like the AB. We anticipate patterns correctly. Bigger 1, we anticipate that it comes back into support of the entire wave. And so what happened is we got an A, B, C, right to 50%. We came into the room today on crude and said, guys, it's likely to go sideways. We're at a key decision point on crude. And that's really what crude did today. It just went sideways. Now, my anticipation is that it'll bounce up here into resistance and come down maybe to the 618 or 786, just because crude tends to extend. But it did, we have to trade it wave to wave, because it could also just come down into that support and then continue its uptrend for the bigger wave 2. We have to do this wave to wave. Right now we're at C, that's a buy in an uptrend. I have to anticipate this is now bigger A and move to bigger B. Does that make sense? It's how we anticipate wave to wave. And crude has behaved perfectly. That's always the tough question. What we say is, to find the impulse, you want to look for the correction. So in this case, I could just look at this chart. This one was pretty easy. I can just look at it and I go, well, that looks like A, B, C to me. Here's the impulse. So crude's actually pretty easy. So if this is impulsive, how's it divided? Well, there's the first wave, there's the second wave, and the third wave is a little smaller. And in fact, if you look at this here, you almost have a small 1. Now, as I look at it, there's 2. There's 3. So there's your first wave. There's wave 1. Now, it didn't correct all the way down, but there's your wave 1. There's your wave 2. All right. So you can start from where you are today and work backwards to find the pattern. Does that make sense, GF? You can do just the opposite. You can start with sunlight blasting through my window right in my face here. Hang on. Let's see the chart. Let's look at a monthly chart on the Dow. All right, here's a monthly chart on the Dow. It goes all the way back to 1980. And you say, where's the pattern? Well, the pattern is actually pretty simple. Now, if we call this wave 1, obviously wave 2 went way beyond the normal 1618. All we do is we call that extended. And there are other numbers out there. We could go, that looks like a pretty big wave. Let's go 461%. Why that? All right, so this wave 2 went all the way to the 4618. Not a big deal. It's a big wave. Wave 2 is the wave that most often gets extended. So if we then extend wave 2, what do we got? There's wave 3. Now this is on a monthly chart, guys, of the Dow. Right. So what happened at wave 3? Almost to the tick, 14.2. We got the big sell-off. The global financial crisis, right down to 618. So at this point we can say, all right, so 1's complete. The 1, 2, 3 is complete, bigger 1. So let's project where this market could go. Might not, and it's not going there tomorrow. So if that's bigger wave 1, where's bigger wave 2? Bigger wave 2 is up here at 22.5. So everyone says the market's really extended right now. maybe it is, but there is that bigger target out there. And look what's happened here. All right. Now we're up to 17 almost. And then I can look at this and I can go, well, wait a minute, let's take the Dow down to a weekly. Let's remove all the drawings. We're working backwards now from the monthly. And we'll go from the global crisis low here. And we'll look at this and we'll go, you know, here's the first wave. Didn't really come down to the 50%. So what we call that is minor. It didn't get to the 50%. In fact, it got pretty much right to the 38, the 382. We'll go ahead and put that in here for the next couple examples. Just leave that on there and save it. All right, so it came right down to the 382. If that's a minor wave, then it went to a new high. Now, a minor plus a minor by our rules makes a major. We have major and minor waves. We have major and minor structure. We have major minor levels. All right, 382 is a minor level. 50%, the zone is a major level. But when we overlap these waves, now we have symmetry. Minor plus a minor equals major. So we have a major wave symmetrical to the 382, and we can see what's happened there. So this is now one wave. Wave 2, we're there. And look what happened to wave 2. The market is calculated, right? All price is doing is measuring human behavior, and humans let it get extended to a certain point, and then they get nervous and sell off. So now what we have to do is watch and see how the pattern continues, you know, whether this trend line is going to hold, all that good stuff. All that makes sense, guys? You see how it's not easy, but it is simple? I mentioned this works on any symbol, any time frame. So let's just look at Aussie dollar on a monthly chart. I don't have that data, Bob. I don't think. Let me look. Is that Z? Is that symbol Z? Well, we'll try and look at that, and we'll look at Bido. Okay, Sophie, that's an excellent question. The way we don't know one. Let me go back to this kind of drawing here. We have a wave up, wave up, wave up. We don't know if this is 1 until 2 is in. Okay, until that point, you know, and actually, how's price really go? It goes like this. It goes like this. It goes like this. All right. Same over here. We don't know this is wave 1 until we have wave 2. Everything starts as ABC. So when we get here, we can say, well, that's clearly impulsive wave 2. That must be wave 1. Until that, everything's A, B, C, right? This is A, this is B, this is C. Now it's 2. We go back and call that 1. It's also why we can be wrong and still make money, because we don't trade A. A is very hard to trade. But we do trade B to C. And B to C, if we're wrong, turns into 2, we actually make more money because it impulsed and we're anticipating a correction. So it can get confusing, and I can tell you it's hours on looking at charts before it really starts to sink in. So, and here I'm not really going to do a wave count other than to just kind of look at this. Here's the Aussie dollar. You see from the low to the high, came right down to 382, went to a new high, much like the S&P and the Dow. No, that's Elliott wave, Jeff. I think you're talking, and that's as much as you just heard everything I know about Elliott wave. Hang on just a sec here. I got to clear the throat. So, but, and we have people who know Elliott wave, and some people it helps them, and some people it kind of gets in the way with what we're doing. So the main thing, yeah, we just, impulses are 1, 2, 3, corrections are ABC. But that's a very common thing that people ask, so not a big deal. So now we pulled down to the 786, so we'll call that wave 1. And the question is, will there be a wave 2? Now, I just, in all honesty, that's a really long time high, I think, for the Aussie dollar, but we want to be aware of the potential. So we pulled back, we started a new wave, went to a new high. We're going to overlap that. And you can go back and look at our posts on the blog. But here's symmetry again. And now 382 seems to happen more on currencies than it does on futures. Oh, no problem, Jeff. Ask all the questions you want. It's the best way to clear everything up. Because this recording just touches the surface of what we do. We've got over 100 hours of recorded video training that we did over the summer and fall that we can put up. And we will go through gold also. We'll look at gold also. Right. All right, so now we're at the 382. So on my post, I just mentioned, look, 382 is minor. But we're talking about minor of a 14-year wave. And not only is that a minor, and you'll learn this over time with us, but it's a minor at what we would call after, at a key level, after a minor. So we actually have a name for this. We call it a minor to a minor, right? Minor pullback to a minor lower low. That's where it short squeezes. And I'll show you an example of that with Apple on a smaller time frame chart. So on my post, I said, look, guys, I know the Aussie looks weak. Australian economy looks like it's weakening. Australian central bank says they want a weaker Aussie, but we're at the 382 on a monthly. I'd anticipate a bounce. So be very careful going short. Now, we had a month, we're 2 months into a bounce. It could short squeeze up to parity and still drop down to 80 because the long-term goal of the Australian Central Bank and this chart is 71 cents. But it's unlikely to do that. It could come straight down, but it's more likely to bounce and then come down. And the only question is how high does it bounce before it rolls over. So that's on higher time frames. Now let's just look at this real quick, and then I'll look at. So the first one I see on there is Baidu, and I'll start there when we go to the individual tickers. Whoops. Got thumbs today. All right, so now we'll go to Apple here on this monthly chart. Let's remove all the drawings. Showing an example of that short squeeze setting up. Now, Apple's been interesting, but it's also behaved quite well. When Apple was at 200, if you told people Apple was going to $80, they would have called you crazy. But that's what it did, and it did it with ABC pattern. There's C, and obviously it took off. Very extended wave 2. But came right to the 50% and has gone from there. So let's break this down a little bit. So it came down to this 50%, got this step. I can't remember if we bought calls here or here. Now, the other thing to note is there was a perfect death doji up here at the high of Apple. Get us in short. Now, we came right to the 618 resistance. So at that point, what we're looking for now, the other thing is, I'm actually looking for a move potentially down to 320. And the reason I say that is this is A, here's B, where's C? 330. All right, so now we have confluence. Background colors, I'll talk about that. All the background colors is a condition, not an action, it's a condition. When the background's green, the condition is support. Simply means we anticipate support holding. Now, because this was so extended, it rotated here at the 382 and support was down here a little bit lower. But now the background's red, we anticipate resistance holding. Right? And everything we do is based on, I think Apple has a strong chance of coming down. But here's the thing. It needs to get to a decision point here, here, and now there are patterns that break the ABC. If it comes into this support, it could go from here because this is 50%. It doesn't have to come to the 618. I anticipate at least the 50%. That doesn't always happen. But from here, it could do this and go. So we have to watch it at this point. Now, if it takes out here, then I anticipate it taking out this and getting there. But it's too early yet. Does that make sense, KJ? So we'll break it down even farther. We'll get down to a 60-minute chart on this because this is how we watched it. All right. So we came up to the 618. Now, see here, the 382 held it, but we're cautious around that 382 because in a perfect world, the 382 is simply A, back to B, down to C. That make sense? Right? A, B, C. Yeah. B, and we're looking for C down here, which isn't in yet, but that's what we're anticipating because that's what's normal. Okay. Now, normal doesn't always happen, but we got to be aware of what's normal. Now, I mentioned I was going to show you a short squeeze pattern, and we got one right here. From this high to this low, this happened to be at that 50%. It came down just above the 50%. Right? Got a very minor pullback, came down and hit the 50%. What it does is it sucks in traders short here and then squeezes them out. And it comes back, tests it, and then it goes. And the same thing can happen to the upside, especially at key levels. Minor pullback, just sucks in a few more people long, and then it comes down. So we actually look for those patterns on different time frames. So that's Apple, and that's how we would calculate Apple. At this point here, we would have been thinking about buying puts. First target, we probably would have taken first target at A, and then we could add back in at playing the B to C. Stop above is high if we're doing puts. So what was that first ticker someone asked me to look at? Baidu? Any questions come up with any of these calculations, let me know. And how we do them? Baidu. Let's look at Baidu. Long term or swing trade. Okay, obviously we got, let's go out to a weekly here because this is looking, first thing I would do here on this is, obviously we're going up. Was there a reason for this high to be the high? And the answer is maybe, all right? This is on a weekly chart. So that's pretty close. Within $5, within a couple of percent. We'll look at Amazon also. Okay, so here's what my thought would be on Baidu. Let's say we just hit that target on a weekly chart. We're coming down to the 382, so we might get a little bit of support here. We have reason for that to be a level of support. So look at this. This is actually a more reasonable level here. So maybe we even get below the 382 and then bounce up. But my target, now if I wanted to go long, I would wait. I'd be waiting for price to pull into the zone and look for an opportunity to go long. If I'm going short, I'm a little late to get short. I don't like to call the top. I'm actually a little early to get short. Sorry, I said that backwards. What I'd look for is continue on down, pop back into the resistance, and then come down. But I would do this on a smaller time frame. So I'm looking at the weekly here, set up longer view. But today, now as we come down to the daily, all right, this is pretty extended move down here. I anticipate maybe it comes down to this level, bounces, and then we're going to have to see how it behaves. I wouldn't want to get long until I got, maybe even filled this gap. The 618 right here on this, where it gapped up to. I have not DH, to be honest with you. I basically don't use volume at all. I don't use, pretty much this is what you see on my charts is what I use. I will use the, heck, let's go ahead and do that. I do use Ichimoku. Okay, so I'm in the cloud, which is neutral here. Now I mentioned we use a little different settings. Usually you can look at a chart and see why. It just seems to hold everything better. So right in here, it's pretty neutral. Now, if price continues like this, there's a good chance it breaks through this cloud, bounces up to the top, and there's your short opportunity. That makes sense? What came after Baidu? I'm going to ask, there's a couple things. There's Baidu FTSE. What's the symbol for FTSE on Ninja? Is it Z? Anybody know? And we will do gold also. Seems to me it was Z for the FTSE. Yeah. All right, let's see if we can do. Let's see. Come on. Charts have been loading a little slow. You bet, Joe. Well, maybe this FTSE isn't going to show up. Anything else anyone wants to look at? I'll load another chart while we're waiting for that one to pop up. Gold. Are we still on April for gold? We'll look at Tesla also. We're still on the April chart for gold, or are we on May? Here's the FTSE chart. All right. Let's go to a weekly first, get high altitude. Maybe I shouldn't. All right. While we're waiting for that FTSE chart to pop up, let's go ahead and look at this. We broke a trend line today on gold, pretty significant, this week on gold. Gold's coming off, I think, 618 support. Well, I actually broke through it a little bit. Minor lower low. Looks like it's squeezing a few people out. That doesn't mean it goes higher, but it's squeezing out people who went short on the break of the previous low. Doing the obvious stuff. So coming off of support, first thing we're going to look for is for a move back up into resistance. Now, usually it will do that. Gold's a little different. I don't really trade gold, but the usual pattern we look for is something like that. Now, it could come all the way up to 50% and go. So we're getting a little extended here. We've had no correction. But there is some risk-averse trading going on. Yeah, so gold right now, it'd be hard to go long. I'd want to see a pullback, maybe fill this gap, and then look for a move up. But we're getting to a place where it's tough to be long. Now, we did break out from this high. We got this high. Gold's probably good at least till 1417. Bigger resistance is going to be up at 1565, probably right at the 1600 level. Maybe pull this out here a little bit more. What was the high of gold? This is about it, 19 something. All right, so what's next? Gold, we're back to the FTSE. There we go, we got a weekly chart going. So weekly looks a lot like every other equity market. So let's look at this. We got a push up, minor pullback. So this is going to be all one wave. We're going to say we're right at 2, and look what we're doing here. At a decision point, we're kind of going sideways. So at this point, to go long, it really needs to take out this high, pull back, or it needs to come back into support at least of, let's say, this wave here, before I'd be thinking about getting long again. And we do have a trend line to watch, and it's sitting right on it. So we're getting pinched here. Big moves probably coming on the FTSE. Yeah, we'll look at copper and see. So are we good on the FTSE? FESX, JP, I'm not sure I can get, let's see if I got that. Let's, we got 15 minutes here, so we're real good. We're still good here for a couple more minutes. And I'll show you what we've got to offer here after that. Let's, I'm going to slim this down to stuff that I got pretty easy to find here. Look at silver real quick, and then we'll look at copper. And if we get a chance, we'll look at some of the other stuff here. So let me change to a daily yet. I don't know why, what's with my data taking so long to load on Ninja these days? Not even let me pull over another chart. Well, let's do this. Let me show you what we're going to, while we're waiting for those charts, we'll go back to them, guys. Shouldn't be, but maybe, RB. let's take a look at what we're doing here. Now, all of these things, we have a lot of stuff that we offer, and we saw some of it. The big thing that we do, probably the most important thing, is the training. Now, this training was actually originally set up as a program for a prop firm. And we had people in the room all summer, most of the fall. And unfortunately, things with the prop firm didn't work out. So we had a very small group that we were going to have trading in that prop firm. It didn't happen. So some of those people are still around, but what we've decided to do is bring that training. We recorded all of it. It was all done live in the market. That's not my voice you will hear on the training. It's Sean McKisson's, who really developed all this, taught it all to me, and then I took it and built the indicator systems that you've seen. But originally that was for the training and the systems was $10,000. Now, when the prop firm fell through, we actually refunded half of that to everybody, just because we felt that was the right thing to do. So the more accurate price would have been originally was $5,000. But what we're doing is we're lowering the price of each individual, and it was all one package. So what we've done is we've broken it out and lowered the prices. Now, a couple of these things are incorrect. You can order them on the website at these prices. A couple of them on the PayPal thing's messed up. Or you can just email me info@nextlevelfuturestrading.com, or email us, I should say, and we will do everything through email. Either way, works fine. Especially if you see an error on the pricing and you click the buy button. So we have the recorded videos. That's over 100 hours. You have access to those. Normally $19.95. Actually, normally $24.95. That's a misprint. Sean's willing to let that go for $14.95. I get everything's lifetime access. Now the X70 trend indicator, which you did not see, you can see on the website, is the indicator I used to build the X90. So everything started with the X70, and then I improved upon that and added to it and built the X90. And then what we do with the X90 package is we include the X70, what we call Trend Elite. On the X70 and the X90, all the settings are locked. This X70 Trend Elite allows you to build your own systems, your own trade setups, by doing your own calculations. Now, we also offer, normally at $349 a month, monthly memberships, which includes all of this while you're a member. So you can go online, watch the videos, come into the live room, and only owners of the system have access to the live room because it's free and it's a training room. I take a lot of trades, and I'll take more, but they're exercises. And what I try and do is I try and define them, and I will say, this is a B2C short, or this is a bigger B2C short that we hope turns into wave 2, so it's more aggressive, so I'm trading more contracts. I'll say this is extended. We're at a resistance level, but everything is up, so I'm going to go long, but I'm only going to trade one contract. I'm going to trail it tight, and I'm going to take my target a little quicker. That's what the live room is for. And it's a lifetime. As long as I'm doing a live room or we have someone doing the live room, it's open to all members, all lifetime members, and everyone who's paying the monthly membership. Now, I know normally they say for the first 24 hours we're going to offer you those prices. Anyone who's attending this webinar or who watches it on the recording, all you have to do is drop me an email. Even if we raise the prices on the website, we will honor these prices here. Now, on our daily levels, that's just simply an email. And I do them after the market, usually, but certainly before the market opens the next morning. and it just comes out, and it just lets you know where your support and resistance levels are for these 5 major instruments here in futures, and then I do the 7 majors, or we do. I'm doing them right now, but we do the 7 majors in the Forex. So we do euro dollar, pound dollar, dollar yen, dollar Swiss, Aussie dollar, dollar Canadian, and the Kiwi, New Zealand dollar. So we send out levels for those 7 instruments on a daily basis. And the way that really works is if you want them just for futures, it's $59 a month. If you want both, or if you want them just for Forex, it's the same. If you want both, it's $89. Ichimoku higher time frame. The only reason I charge for that is because I had a programmer design it, and I have to actually license it on Ninja servers. If you want the free normal Ichimoku for NinjaTrader, and all of these only are programmed for NinjaTrader. But if you want the normal, just the regular Ichimoku, drop us an email, and we'll send you the zip file you need to install Ichimoku on NinjaTrader. Everyone got that there? So we'll minimize it and see if we got some charts up. All right, silver on the weekly. Oh, one other thing, drop me an email Monday and Tuesday of next week. I will open up the live room free for anyone who wants to come in and visit. Drop me an email, info@nextlevelfuturestrading.com, and I will send you the link or the registration link for you to come in, because it's much easier to see what we do in a live market. So let's take a look here at silver. We're testing 786. We've got this little minor. Certainly not behaving as well as gold. If we're going to bounce our first level of resistance, it's going to be up here at $27. It's really going to make a move. And we're looking at 35.38. So if you wanted to go long silver here, the real trade would be you go long, stop below the low. If you want a tight stop, you put the stop right here below this low. But this is really the right stop over here. That makes sense? That's on a long term. If you're buying and holding silver forever, now's probably a pretty good time to buy it. Just looking at it. You know, I mean, get out of it if it gets below 13 bucks. Should bounce up in the 35 area. You know, certainly $30 fills the gap here. 26. So that's not too bad. Did you get the email address there posted? Got it? Okay. Well, Yana, that's about all I got, unless there's some other questions here that I missed, or symbols that I missed. We can go over. I'm happy to do that. Copper. Let's look at copper. Copper's had a tough week. He did not have a great day today, it looks like. Dr. Copper. Now, wow, that's a definite breakdown. That does not bode well for the market. Oh, you bet, Valerie. Happy to do it. You know, it's relatively new because of the situation with the prop firm. So we're just trying to build a community of people who think fairly similarly in trading, but also have some different ideas and some useful ideas that we can talk about. You know, one of the things I talk to people in the live room about when they get the indicators is when you first get the indicators, take every trade. For the first week, just take every trade. You'll be at least on one instrument. You'll be completely exhausted. But then what you want to do is you want to look at the trades that lost money and what was similar about all of them. And then you look at the trades that made money and what was similar. We lost my audio. I don't know how that happened. I had it just before. Oh, okay. Audio's good there. All right. Well, Yana, that's about all I got for the day. And if no one has any other questions, I can turn it over to whoever it is that follows me. And thank you very much for this opportunity, guys. It's been a lot of fun. I was actually listening in to just about everybody before me today. And there was just a lot of really good information.
Well, Don, thank you. If no one else has questions, we want to say thank you for your time and sharing, and as Valerie said, for your generosity to show your trading room and share with all of us. We really appreciate it, and hopefully we'll have you back. Our next presenter is Mr. Tom Busby. He is from the Diversified Trading Institute, DTI, trader for a long time. Also, he's participated quite a few times in previous trade-a-thons for TradingPub, so we're very excited to have him back. There is always a lot that he can share with us, and hopefully all of you will learn a ton. So Mr. Busby, if you can get your mic going and we can test your volume, and I'll start your presentation. Oh, it's there. Whenever you're ready, you can just take it away.
Testing 1 2 3. Testing 1 2 3 4. Thank you, Yana. Can everybody hear me okay? Okay, let me see if I can do something here. If I can do something, we might have a little extra special fun. Let me go to desktop sharing. Start desktop here. Can everybody see the roadmap there?